What if I told you that one day, in a single moment, someone stole over $500 million without holding a gun, without breaking into a vault, and without anyone even noticing until it was too late? What if that someone didn't just steal money, but broke the very trust on which an entire new financial system was built? Would you call it the greatest heist in history, or the perfect crime? Let's find out. Bitcoin, a digital currency born in 2009 from the mind of a mysterious figure known as Satoshi Nakamoto. It promised freedom from banks, freedom from governments, and the idea that you could be your own bank. But that dream came with one condition. You had to trust the system and the platforms that made it easy to use. In 2010, a programmer named Jed McCaleb launched a little-known site called Magic: The Gathering Online Exchange, or Mt. Gox, originally for trading fantasy game cards. But soon, it became something far bigger. McCaleb saw an opportunity, repurposed the site for Bitcoin trading, and later sold it to a French developer named Marc Carpelles. By 2013, Mt. Gox wasn't just a player, it was the player. Over 70% of all Bitcoin transactions worldwide went through its servers. Imagine if one company handled every bank transaction in the world. That was Mt. Gox. But Mt. Gox was built on shaky foundations. Its code was clumsy, security was weak, and it was run by a small team with little experience in handling billions of dollars worth of assets. Yet, the world trusted it. What nobody knew was that by the time Mt. Gox became famous, the thieves were already inside. Unlike a Hollywood smash and grab, this wasn't loud or flashy. Starting as early as 2011, hackers found a way to exploit weaknesses in Mt. Gox's system. Slowly, over years, they drained coins from the exchange, a few here, a few there, so quietly that nobody noticed. It was like drilling a tiny hole in a water tank and letting it drain drop by drop. The method they used is now infamous: transaction malleability. This flaw allowed them to alter the ID of a Bitcoin transaction before it was confirmed, tricking Mt. Gox into thinking a withdrawal hadn't gone through, so it would send the coins again, and again, and again. By early 2014, the cracks became impossible to hide. Users began reporting delayed withdrawals. Mt. Gox blamed technical issues, but in February, they froze all withdrawals entirely. Weeks later, the website went dark. When it returned, a statement appeared: 850,000 bitcoins gone. At that time, worth over $450 million. Today, at Bitcoin's peak prices, that would be more than $30 billion, more than the GDP of countries like Iceland or Montenegro. The crypto world erupted. People had lost life savings, businesses went bankrupt, and Mt. Gox customers took to the streets outside its Tokyo headquarters. Some had invested their children's education funds. Others had mortgaged homes. All gone in the blink of an eye. Marc Carpelles became the face of the disaster. Some saw him as a criminal, others as a scapegoat. Japanese police and blockchain investigators began digging. What they found was shocking. The coins hadn't all disappeared at once. The theft had been happening for years. Even worse, Mt. Gox's own records were so poorly kept that they didn't even realize the coins were missing until almost all were gone. This wasn't a heist done in hours. It was a crime scene stretching over 36 months. Then, an incredible twist. Months after declaring bankruptcy, Mt. Gox found 200,000 bitcoins in an old format wallet they had forgotten about. Even with that recovery, over 650,000 bitcoins remained missing. Many of those stolen coins are still sitting in untouched wallets, the kind you can see on the blockchain but not open without the keys. Bitcoin's price collapsed from over $1,150 to under $400 in weeks. The Mt. Gox hack didn't just wipe out users, it wiped out trust. Regulators worldwide tightened their grip on cryptocurrency exchanges. In some countries, new laws were written entirely because of Mt. Gox crypto advocates argued it wasn't Bitcoin's fault. It was the fault of a centralized exchange running on bad code. But the damage was done. In 2015, Japanese police arrested Carpelles on charges of falsifying data and embezzlement. After a lengthy trial, he was acquitted of most charges, found guilty only of data manipulation, and received a suspended sentence. To this day, many believe he was more incompetent than malicious, a man in over his head running a billion-dollar empire from a crumbling office. So, Who pulled off the biggest Bitcoin heist in history? Some investigators believe it was the work of Russian cybercriminal groups, possibly tied to another hacked exchange called BTCE. Others suggest it may have been an insider, or even multiple insiders, at Mt. Gox itself. The Mt. Gox hack left one lesson burned into crypto history. Not your keys, not your coins. If your crypto is stored on an exchange, you don't truly own it. The exchange does. And if that exchange disappears, so does your wealth. At the time of the breach, this was not just a catchy phrase circulating in online forums. It was a bitter reality hitting hundreds of thousands of ordinary people like a brick wall. These weren't just seasoned tech experts or professional traders. Many were everyday investors, parents saving for their children's future, young people who believed they had found the next gold rush, retirees who trusted the bold promises of a new era in finance. They opened their accounts one morning, expecting to see numbers that represented years of hope and patience, only to find them replaced with zeros. The immediate aftermath felt surreal. News of the hack spread across Bitcoin forums like wildfire, each rumor more alarming than the last. At first, many clung to denial. Perhaps it was a glitch, perhaps withdrawals were just delayed. But as hours turned to days and days turned to weeks, the truth settled in. The coins were gone. No sirens had blared, no physical doors had been forced open. The theft was silent, invisible, and devastatingly complete. Governments and regulators who had once scoffed at Bitcoin as a fringe curiosity suddenly realized its potential, not just for innovation, but for massive, uncontrollable loss. They demanded answers. How could a supposedly secure, decentralized currency lose so much without anyone noticing? The answer was both simple and damning. Bitcoin itself was fine. It was the human-run gateways, the exchanges, that failed. In the wake of the disaster, the crypto industry rushed to protect its future. Exchanges overhauled their systems, introducing multi-layered defenses. Large sums were moved into cold storage, offline wallets immune to remote hacks. These cold wallets were no ordinary drives. Some were stored in high-security vaults beneath mountains, in facilities guarded by biometric scanners, armed personnel, and reinforced steel doors. Multi-signature authentication became a buzzword. Transactions would now require approval from multiple parties, making single points of failure less likely. Regulators around the world stepped in. Japan, embarrassed by the collapse of a Tokyo-based exchange that had once handled 70% of all Bitcoin transactions, introduced strict licensing requirements. In the United States, agencies like the SEC and FINCEN began scrutinizing exchanges, forcing them to register, submit to audits, and comply with anti-money laundering laws. Even in countries with looser rules, the Mt. Gox hack served as a grim reminder that unregulated doesn't mean invulnerable. Yet beneath the new safeguards and glossy PR campaigns, veterans of the crypto space remained skeptical. They knew the truth. No system is truly unbreakable. Criminals evolve just as quickly as technology, sometimes faster. Every locked door invites someone to find a key, or make one. The story of Mt. Gox echoes older tales of human ingenuity and greed. In the 1800s, bandits learned to rob armored trains. In the 20th century, legendary thieves cracked bank vaults thought to be impregnable. The Mt. Gox hack was simply the modern version. No guns, no masks, no getaway cars. The robbers didn't need to step foot in Japan. All they needed was code, patience, and the perfect vulnerability. And their prize? It still exists. Somewhere, hidden across the endless expanse of the blockchain, lies the spoils of the heist, an untouched fortune worth billions at today's market prices. The cruel irony is that the blockchain itself, the very technology that underpins Bitcoin, keeps a perfect permanent record of the stolen coins. Anyone can see them. You could pull up the addresses right now. They're like treasure chests sitting in plain sight, yet locked with keys that no one else possesses. The wallets haven't moved in years. No major transfers, no sudden splurges. Whoever holds those private keys knows they have immense power, but also immense risk. The moment they spend even a single coin, the world will notice. Blockchain analysts will trace the transaction instantly, following the trail through every wallet, every exchange. Governments will mobilize, subpoenas will fly, and every move will narrow the list of suspects. That's why many believe the coins will never move. At least, not in our lifetime. Some say the hacker is waiting for the perfect moment, a chaotic point in history when the world is distracted and cryptocurrency regulation is weaker. Others suspect the private keys are lost forever, stored on a hard drive tossed in a landfill, trapped in an encrypted file whose password was forgotten or destroyed by accident. In the strange world of crypto, both scenarios are entirely possible. But then there's the third theory, the one that chills even veteran investigators. Maybe the thief never left. Maybe they're still here, somewhere in the crypto community, hidden behind a different screen name, blending seamlessly into online discussions about Bitcoin's future. Perhaps they post in forums debating blockchain upgrades, pretending to be just another enthusiast. Maybe they engage in heated Twitter arguments about regulations, all while quietly guarding a secret that could shake the industry to its core. And maybe, late at night, they open those wallet addresses in a private browser tab. Not to touch the coins, but just to stare at them. They might have read every article ever published about the mount. Gox hack, memorizing each flawed theory, smiling when self-proclaimed experts point the finger at the wrong people. They may have watched every blockchain analysis video on YouTube, not with fear, but with quiet amusement, a private joke no one else will ever get. They don't need to hide from the blockchain. As long as the coins remain frozen, the evidence is nothing but a monument to their patience. After all, in the eyes of the public, suspicion is meaningless without proof. This idea isn't far-fetched. Cybercriminals throughout history have been known to insert themselves into the very investigations hunting them. Sometimes it's arrogance, the thrill of being close to the chase without getting caught. Sometimes it's curiosity, wanting to see how close the authorities are. But in the digital realm, it's more than that. It's about control. Watching the world chase shadows, seeing law enforcement follow dead ends, reading wild conspiracy theories, it all becomes part of the game. And every time the trail goes cold, the thief is reminded of their dominance. The truth is still theirs alone, hidden behind an encrypted wall only they can breach. And then there's the temptation. Imagine holding billions of dollars in value. Invisible, weightless, untraceable, until you decide to move it. It's a fortune larger than most nations' GDPs, stored not in vaults or gold bars, but in nothing more than a string of characters on a private key. Every single day, the thought must cross their mind. Could they move just a fraction? A few hundred coins? Enough to test the waters to feel that rush again? Could they slowly launder it through smaller wallets, passing it across jurisdictions until the trail becomes a tangled mess? Could they trade it into privacy-focused cryptocurrencies like Monero or Zcash, currencies designed to erase transaction histories? Could they strike a deal in the digital underworld, swapping the stolen Bitcoin for hard assets, art, or even legitimate businesses? And yet, for all those tempting possibilities, with each passing year, the danger only grows. Blockchain forensics have become far more advanced than they were in 2014. Artificial intelligence now hunts for transaction patterns invisible to the human eye. Specialized software can map out thousands of connected wallets in seconds, narrowing the net. Even the tiniest movement of the stolen coins, a single transaction to the wrong address, could be the crack that brings the whole secret crashing down. In the world of digital theft, one careless move can undo a decade of silence. That's why the safest option, paradoxically, may be to do nothing at all, to let the fortune sit untouched, aging like some forbidden treasure, a silent ghost haunting the digital world. The coins may never move. Not next year, not in 10 years, maybe not ever. And perhaps that's the point, the ultimate show of discipline, the ultimate reminder to everyone watching that they got away with it. And so, the billions remain locked away. They have no weight, no sound, no physical form, yet their presence looms over Bitcoin like a shadow that will never lift. For investors, it's a constant reminder of the fragility of trust, a scar from an era when digital gold proved it could still be stolen. For thieves, it's the ultimate prize, a symbol of the perfect heist. And for the rest of the world, it's a mystery that may never be solved, an unanswered question hanging over the history of cryptocurrency. Do you think the mastermind behind the Mt. Gox heist will ever be caught? Drop your thoughts in the comments, and remember, in crypto, trust is everything, and anyone can be your friend until they aren't.